we should never be misled by the indices. The indices, and they just take, if you take the S&P index, it just takes, market companies by and large above a certain market cap, and it just puts them in there. But that doesn't mean that we should be in there. And first of all, here's one basic fact about healthcare that makes it already from the beginning a very iffy place for anybody who's half smart and half moral to invest in it, which is that at some point, somewhere in your business, in some way, either to a large or a lesser extent, you're going to be making decisions where on the one side you have the health, well-being and life quality of people, fellow human beings, and on the other side, in a directly opposed zero-sum decision, you're going to have the profitability of your business. And that is just a moral position that, to the extent that we need it in a capitalist society, that's fine. But if I have a choice not to have to be involved in that in any way, I'm much happier. So who would ever want to be in a business where, even just as a shareholder, where our decision to make a high return on our capital, which is what we're in business to do, directly impacts the life longevity of somebody? And so that rules out any HMO. Because what HMOs are in the business of is saying no. There are so many treatments that different people could have for different things. And if they want to pay for them privately, no problem. But what most people want to do is they want to get some of their health insurance dollars back from the HMO. And if the HMO wants to send some money back to the shareholders, they at some point have to say, no, you can't get this treatment. I really don't want to be the guy who does that. So, in a certain way, an HMO takes money in on the one side, runs a network of doctors and tries to convince its user base to use that network of doctors and network of services to the minimum possible. So there's one area of healthcare where that effect is attenuated, and I was switched onto it by reverse engineering the Berkshire Hathaway investment documents. So one of the Berkshire managers, it's unlikely to be Warren Buffett, has an investment in this company, DaVita, and DaVita does dialysis. Now, what is very interesting about dialysis, and it can be distinguished to the vast majority of healthcare, so the one thing is making decisions where somebody wins and the shareholder loses, or vice versa. It's not a great place to be. The other thing is that how much healthcare should you give somebody? Well, how long is a piece of string? The vast majority of healthcare has a very unclear or negative ROI when looked at from the value of a human life. So in a certain way, we want to live in a healthy and just society in which people have as much as possible of the good stuff, and hopefully the cost of the good stuff keeps going down and we can provide more and more of it to people. But much of healthcare from a societal standpoint is not going to increase the tax-paying ability of that society. It increases the quality of life of the people who receive it. So if you get, on the one extreme, if you have plastic surgery, or if you have an injury healed, it doesn't actually change anybody's productive ability. Well, it turns out that dialysis does change your ability to be productive. You take people who would not be able to be productive members of the workforce, and by giving them dialysis, you put them back into the workforce, you give them a life, and you enable them to earn money and pay taxes. So there's a higher ROI in that particular part of the healthcare sector. So there's two companies in the United States. It's DaVita, and here in Europe it's a company called Fresenius Medical Care, who have huge market share in the dialysis market, and those guys are very smart. They've focused on one specific sector that has a high ROI. But even then, DaVita was recently in the United States hit with a key term action where, still an important payer is the US government, or Medicare, or the Veterans Administration, and it's just too easy and the incentives are too high to cheat on the way you get reimbursed for some of the stuff that you do. So again, problematic from a business perspective. The only other place that is left is the drugs business, and my best understanding is that pharma is going through some substantial changes. I don't know what it looks like on the other side, but we had an era of 20 or 30 years where there was very high returns to what they call wet chemistry, and it seems like that era has come to an end. Exactly what the economics of pharma look like going forward is at least a question in my mind. But so, you know, I thought that when I started investing that all I had to do was find one newspaper towns and invest in them like Warren Buffett did, and then maybe add one or two TV stations to the mix. And we're in a very different world. I think that to go through life without investing in retail or healthcare is just fine. You know, not a problem.